You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out with the rockinest of rockin' rock shows. Yes, of course, it is time for the option block. My name is Mark Longo, and of course, you already heard where we're from, theoptionsinsider.com, the network, all that good stuff. And you guys know you can join us every Monday and Thursday at our new-ish kind of time. Been doing it for a month or two now here at noon Central, 1 p.m. Eastern, down from the old 3 p.m. Central, 4 p.m. Eastern. I think it works a little better, gets us into the market mix. You guys can listen to us as you're actually trading, which is always fun if you grab the Mixler link. Otherwise, you get the podcast, which also comes out pretty quickly these days as well. You can get that, of course, wherever you get your favorite shows. And, of course, wherever you're listening, live, however you listen, really, live after the fact, make sure you do hit us up, questions, comments, insights. I know a lot of you have a lot of crazy questions these days because the markets are kind of crazy. So we'll get to all of them on the old show. And joining me to do just that, let's go around the horn. First off, it has now been scientifically proven that he can never leave St. Charles because the second he does that, all hell breaks loose. He is, of course, Uncle Mike Tosaw from RCM Wealth Advisor. I should say formerly of RCM Wealth. Now it's St. Charles Wealth Management. Uncle Mike, welcome back to the show. And do you understand now that you can never leave the environs of St. Charles? We should put an armed guard there to keep you in.
It's difficult. I mean, why would anybody ever want to leave? But I had a great time last week with the students at Duke University. It was a ton of fun. But yeah, it was definitely a market adjustment when I'm not sitting in the hot seat.
Yeah, so yeah, you can never leave again. And if you are going to leave, give us ample notice so we could put on all of our downside and our VIX upside and all that other good stuff forthwith. So, and also joining us here on the old program, all that frenzied typing can only mean one thing. We are joined by the greasiest of meatballs, Mr. Mark Sebastian. Mr. Meatball, how you doing? Who are you sending letters to today, sir? Your pen pals in Botswana?
I'm good. I thought I was muted. I apologize. I didn't want you guys to be hearing me typing away. But I am enjoying my day. I'm watching this weird mixed market that is flopping and flailing all over the place. Kind of a crazy mixed bag of a day. But I'm doing well. I've got got our good friend Jill Malandrino coming over for dinner tonight. Looking forward to that. So I've got to make some meatballs, actually. I've got the lamb, the pork, and the beef at home, and got some nice panko breadcrumbs I'm going to use, and I'm going to probably make some pasta and a Caesar salad and some bread. So
she must
if you can make your way out to the one of the 10 towns that changed America tonight, Mark, you're more than welcome to partake.
I'm sure I'll run into Jill and the rest of her crew this week. It is in time for the big Futures Industry Association Expo here in Chicago. So just to use a shorthand, listeners, pretty much the entire listed derivatives world descends on Chicago for a few days, and it officially kicks off tomorrow night, but there's events pretty much all week long. So pretty much the second I'm off this show, I'll be heading out towards various events that begin FIA week and pretty much just curtails. By the time we get back together here on the show on Thursday, I'm sure I'll have very little voice left and all sorts of other fun stuff. But it should be a good week, so stay tuned for more goodness hitting the network from FIA this week, even as we wrap up the stuff I did down in D.C. a week or two ago. So much fun stuff hitting the network. Stay tuned for all that. Meanwhile, it's time for us to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the place where we talk about trading, a.k.a. the Trading Block. And as Mr. Meatball alluded to when I was joking with Uncle Mike before the show, he usually likes to come on, and I joke with him, and I say, what's up? And he says the markets, usually. Today, you can't really say that unless you're very Dow-centric. If you're a Dow-centric person, then you can say that. Dow is up a tenth, actually just ticked down. Now it is unched again, so I guess you can't say that anymore, Uncle Mike. But for a brief, fleeting moment, it's back up, 0.1% again. So there you go. Now you can say it again, Uncle Mike. The Dow is up slightly. Everything else is off slightly. S&P off 0.1%. NASDAQ off a little bit more than slightly, off a little bit more than 0.5%. And VIX cash taking a slight breather, off about half a handle, or as our friends Kramer would say, half a buck. We'll get to that in a little bit. Right about 2081 or so right now, so shy of the levels we hit last week, but still frothy, still elevated, indicating that there are still unknowns lurking out there. So a lot of people still trying to wrap their heads around what the heck really drove this thing structurally last week. I've had a lot of interesting discussion and debates about that topic. Our old friend VXX out there as well, kicking it up a little bit today, up about half a handle, right on 34.5. So well north of that mythical, magical 30 level that it has been under for quite some time. As everything gets elevated, go figure. The vol products go off and get elevated as well. But there's a lot to parse, a lot catching our eyes. Of course, we've got the remnants of hurricanes kind of leaving their impact on the marketplace. We have the what the heck's going on with the Saudis going on over there. And as a result, that's moving oil a bit again. So a lot of drama, no shortage of drama going on out here in the old marketplace. Well, let's start with the man who moved the market last week. Let's see if he can calm it down this week. Mr. Uncle Mike, sir, what's your take on the madness of last week? So we didn't get to do a show really after Wednesday, so we weren't really live to talk about all the madness that unfolded at the end of the week. So maybe what is your takeaway from that, and maybe this kind of weird mixed market we see today, sir?
Well, I think that, quite honestly, I think it's just a pullback. I hate to be kind of anticlimactic in all of this, but just look at a chart of the S&P and look at the fact that in late March, early April, I follow SPY, but we are at in the mid 250s. Over the course of 6 months or so, we go to the lower to mid 290s, and we pulled back. Now, you might say, well, Mike, that's kind of a significant pullback. And yeah, it is. But in looking at this, one thing that I believe really happened is that there was a lot of forced selling going on. Now, of course, I don't have the margin call records of all the major brokerage houses to back this up, but this is just kind of my theory on it. Whenever we get closer to all-time highs, people start becoming more complacent. Like that's what's pretty much happened since the beginning of all markets. And then when that happens, they're thinking, well, maybe I can buy just a little more. Or fund managers may think, oh, shoot, I need to be buying just a little bit more because if I'm not in this, then it's not going to look good on my quarterly reports or whatever. And so the envelope starts to stretch a little bit in terms of how much margin you're using. And then when we start to have a little bit of a pullback, when the the leverage is stretched a little bit more than it typically is, just because of either people climbing the wall of worry, people just wanting to get into this market because they're so excited, whatever the case may be. Margin calls happen. And then when margin calls happen, it kind of creates a little bit of a chain reaction, and it creates a lot of forced selling that was not the original intention to begin with. But that's what happens. Now, do I think it's because the Fed chair is I forget what the president said, crazy or or loco, whatever he said? No, I don't think that necessarily. Do I think that the market is waiting to hear about some deal coming out from China? Not necessarily. I personally think that this is just a lot of forced selling that's involved. Now, what has happened from a news standpoint as to what would cause such a big pullback as such? And I don't really think that there is anything at this point. Interest rates, I think that's old news. I think that are we going to have a deal with China? Are we not going to have a deal with China? All right, originally I figured we would have one by the time the midterm elections come around, but now that's looking very doubtful at this point in time. So what has happened to justify such a large sell-off? And I'm just going to be very blunt here. I think that there's just more sellers than buyers at this point. And that's my take on it.
So as the resident permabull here on the show, this doesn't needlessly worry you. This actually, and I've said it before on the show, but for guys like you, advisors who are out there spending a lot of your time putting on protection and then finding ways to pay for it for your clients, this is not a bad event at the end of the day, because it kind of reminds clients who are maybe calling you up other times saying, why are you wasting all my money on downside, now saying, hey, how come you're not buying more, right? So that's maybe a good little tonal shift for you, sir.
Yeah, I was having that. I was on the train with the Thompsons on Thursday or Friday, and they were telling me that all the Thompsons being the Thompson twins, Matt and Mike, that many of you may know, their customers are all complaining about having too much of a hedge on, and then as soon as we get a big sell-off, they're like, why aren't you more hedged? It's incredible the way, it goes to show you why a retail trader can use somebody that's a professional to help them invest, as, people don't always make logical decisions.
Nope, there is certainly like buying tons of Jan10 puts and VXX. Things are crazy and illogical and madness. No, of course I am joking. But Mark, we talked a bit on Friday, so we had a chance, you and I at least, to chat about what's kind of been going on. But any additional thoughts, any additional mullings over the weekend here about what you think has really been driving this structural shift we're seeing in the marketplace? A lot of people talking about the options market was really pricing in a lot of uncertainty going forward. You had your old buddy, the Rock Lobster, talking about his legion of various VIX zones, which I've been on him for a while, to rebrand, and I think he finally is. We're going to get the VIX danger zone and all sorts of other much more compelling things in VIX zones 1 through 4.
Highway to the danger zone.
Exactly. Just think of all the Kenny Loggins, tie-ins you could do.
That'd be
with
amazing.
That. It would be awesome.
And then you could make when we're in zone 1, that could be the I'm all right zone, and that could be the theme from Caddyshack.
Yeah, there you go. You got the dancing gopher. I mean, there's so many ways you can rebrand it to make it.
I'm all right. Don't nobody worry about me.
Because your average layman, knowing the nuances between VIX zone and VIX 2 and 4 may be hard. But you start saying the danger zone, you're like, okay, I'm ready.
Yeah,
I'm in.
I think that. So I would say that if you looked at one thing that really changed, we had that one sell-off, and then it looked like the market was just going to recover the next day. But what happened? We had a really, really bad CPI number come out. Super inflationary. Market spooked. That was what caused us to sell off 100 points. So when I look at the overall market, I see a market where there's the potential for that is what kind of caused this big sell-off. I think that we did see, I think we saw a pretty decent sell-off based on the CPI number, and I think that's what did it.
That's a lot of movement for the CPI.
I know, but that's what spooked everybody. That's what caused interest rates to spike. Interest rate spiking caused the market to sell off, because right now we're in that weird range where interest rates and equities are correlating, and that tends to happen when we're getting kind of outsized moves. So that is the issue.
Good old CPI striking again. Yeah, you're right. We haven't seen really a CPI be a huge market mover in some time. So, there's a lot of things that I think that got mixed into that not quite delicious stew we all had to suck down there last week. And we're still kind of teetering on the precipice right now. As I mentioned at the top of the show, the markets can't really decide where they want to go. The NASDAQ still kind of into the firm red, some names firmer than others, like Netflix. Those of you out there saying, this madness, we got hurricanes and macro and China trade wars and Saudis and all. I can't make heads or tails of this and just macro madness. Give me something concrete I can kind of sink my teeth into. We can do that for you, because back this week, it seems like we just left it, but we're back in it. It's the never-ending gift that is earnings season, and we're back in it with some big names popping off pretty soon, actually, including the old widowmaker, Netflix itself. Trading today, $334.50, off about $5, or about 1.5%. So Netflix is one of those names out there in the tech-heavy NASDAQ that's taken a bit of a drubbing today. They have earnings tomorrow after the bell, so you don't have to wait too long for this name to give us perhaps indication. It's kind of like maybe we were last quarter, where we were kind of in a bit of market was in a bit of an uproar, a bit of a tumult, and then Apple came along and kind of just turned it for a while and got us back on the old green upside swing. And then we'll see if earnings this week can maybe exacerbate the kind of unsettled mood the market's in, or if maybe they could tamp things down a little bit. And then, big names popping off this week. Let's look at our old buddies there at Orats. They put out these great free earnings move reports there. You can find them, of course, on our website, theoptionsinsider.com. And if you did such things, you can find a lot of names broken down there, including the old Netflix, which is, the earnings are coming out tomorrow after the bell. They're pricing in stock right about $335. They're pricing in, or a little bit more than $29, about $29.50. In the past, they were pricing in about $27. So they're about quite a little bit, about 10% or so richer than they have been in the past. That's interesting too, because the historical projected moves they were giving them was about a little bit more, historical actual moves they were getting was about 28 and change. So you could see why they're pricing in perhaps a little bit more than they were last time. This time they're pricing in quite a bit more, actually. Over this same quarter, so this same quarter for the past, 12 quarters, so within the last 3 years there, how many times this quarter, what has moved, this same quarter has moved $28.16. So it's kind of right in line with there. And over the past calendar year, it's averaged $22 moves every cycle. So it's kind of a big gulf out there in terms of what they're pricing in. If you're wondering what the volatility should be after earnings, they're expecting about a 44%. So that kind of breaks in takes out some of the juice we're seeing, some of the froth we see here on earnings. So you can see what it might be after the dust settled. So the Netflix straddle is kind of right in line with what it used to be. It's about an 8% difference from last time. So it's not super rich, super expensive, really compared. It's kind of very much in line with what we're seeing. We also have IBM after the bell on the 16th, and they're pricing in about $6.50. Let's see where IBM is right now. It's probably about 141.5, actually up on the day, about 0.5%, carrying some of that old school Dow up to glory and green here today. And they are pricing in out there in IBM land. Let's see, they're pricing about $6.50. The previous moves and this past actual moves about close to that, about $6.40. So you can kind of see the method to their madness of what they're pricing in this time. This same quarter, they move about $8.25. So they're underpricing this same quarter. Over the past year, they've moved $8.33 a quarter. So maybe a little bit cheap there, and the analysis says here you're about 25% below what they have moved in the past. So maybe there's a chance there's a discount there, or maybe there's a reason why IBM is looking pretty cheap out there. But a lot of big names popping off this week. Those are just two of them. We have Johnson & Johnson. We got a bunch of names coming off. The Goldman Sachs, if you're wondering about Goldman, they're pricing in about $6.50. Previous moves, they've been about $4.42. So they're looking a little rich right now. Same quarter, they moved $5.50. Over the past year, they moved $3.37 per quarter. So yeah, they're pricing in over $6, $6.50 right now. So perhaps a little bit of juice there. Goldman Sachs right now looking at about $215.27, also up on the day, a little bit more than 0.5%. So interesting stuff there for all of you who just, I'm done with macro. Give me something I can sink my teeth into. Again, you can find these reports on theoptionsinsider.com. If you want to see how these things all play out, even if you're not trading these names, come back a day or so later. We usually post the earnings results reports where you could see, here's what we projected, here's what the market was pricing in, here's what actually happened, and here's how all that kind of stuff breaks down. So it's kind of informative, even if you're not trading these things, or if maybe you're thinking about trading them in the future, it's kind of informative to see how they play out there. So keep an eye on that because, again, it's great data, it's free, and it's very informative when you're trading. Speaking of informative, let's get on to some informative and perhaps weird trades. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get odd, we get weird, we get wild, and we always kick things off. Mr. Meatball, there's a name we kick things off with a lot. I'm not sure if you're familiar with it. It's kind of a lesser known name. Begins with a T, ends with an A. The ticker. I think it's Norwegian TSLA. I think it's how it's pronounced. You actually have to add in kind of like an umlaut between the S and the L there. Are you familiar with this name, Mr. Meatball?
I am not. Are you?
I am, because it's actually Tesla. I'm just playing with you, and you're taking me very literally today, which is throwing me off. I'm not sure what to make of your very literal madness. But let's go on here. Tesla, one of the names that is actually not feeling too much of a thump here on the Nasdaq side, only off about 1/3%, or not even a handle. So that's a rounding error in Tesla on most given days. Right around $258 right now. We like to look a little bit farther out than just now. We go out to those old friends of mystery puts that we've been watching for quite some time. And if you're wondering, did the mystery deepen today? I can say emphatically yes. And for some decent size, they are old friends of mystery puts that kicked it all off. The 50 puts in Tesla, which remain at the top of the leaderboards there for open options positions in Tesla. They persist and have done so for well over a year. Are the Jan 2019 50 puts, almost 1,300 hitting the tape today, trading almost exactly $1 right now. So these things continue to just trade wild and woolly, over 76,000 open on this strike now. But they are not alone on the put dance. No, almost 700 of the par puts going up today, 42,000 open there. Those are trading for exactly $3. 250 of the 70 puts. Don't see those too active in there. Maybe a little bit of a funky fly going up there. 250 of those are trading for $1.60. 6,600 of those are open. And even if that's not outlandish enough for you, 400 of the 10 puts going up today. Yes, those are trading for about a dime, and about 35,000 open on that strike as well, listeners. If that's not far enough out for you, we can oblige you. We can go all the way out to 2020 and talk about the 50 puts, which are lighting it up today to the tune of about 100 of the Jan 2020 50 puts, almost 27,000 open on this strike. They're trading right around $5.40 for those puts. And even the 10 puts in 2020 lighting it up, 126 going up today. Those are trading at about 63 cents. 7,000 open on this strike. All this a long way around to saying, Mr. Meatball, how many of these Norwegian companies' puts did you buy this week, sir?
That you didn't realize that was all me?
I had a feeling. I know you like yourself some downside. I didn't know you had all of it.
I backed up the truck on these. I backed up on the truck. No, I mean, it's clearly someone's got an axe to grind. Probably owns a bunch of stock. That's the only reason why you would do this type of stuff.
Usually, there's a lot of funds out there playing in these. There's could be stock, could be CDSs, could be all the above playing, particularly when you get into these things like the tens. those are pretty fascinating as well. But we enjoy your many conspiracy theories. You've sent us many. Continue sending us them on these puts. I'm glad we've sparked a nice little cottage industry on speculating on the motives and the madness of these downside puts in Tesla, because it is endlessly fascinating. Let's move on to some new names. These are hot off the presses, listeners, so we're going to analyze them all live together here as our Eye of Sauron continues to scan the market continuously for us here. One of the fun things about doing the show a little earlier is you get these hot off the presses kind of scans, and we can kind of look at them live and see what's going on. Let's kick things off. Looks like the biggest one hitting our tape right now is, I think this is a newcomer to the odd block. This is Range Resources Corp, ticker symbol RRC. If you're not familiar with this name, this is an independent natural gas company. They also do liquefied natural gas, obviously, so they explore and produce natural gas. This is the name that averages about 8,000 contracts a day, so not bad for an odd block candidate. And today, doing almost 48,000. Looks like it's pretty straight up even calls to puts, which is pretty surprising because what we saw out here, at least one leg of this, perhaps there are others to go. Yes, there are, which is fascinating. Sometimes our scans pick up one side, and then we have to go digging for the other leg of it. But what our scans found, which is kind of interesting, is the Jan 2013 puts trading 20,360 of those in one big print for $1.19, coming in pretty much right off the bid. So these are about a 15-cent wide market on these bad boys. So it looks like paper dumping a bunch of these. This is opening only about 4,600 contracts open on this strike. So it seems like at first blush, a bit of a line in the sand going on here, but then you do a little bit further digging. Worth noting, this did not go up as a spread. I'm just looking here to confirm. No, this did not go up as a spread. So these puts went up at about 12.10 here. Let's see here as I go back. Take me back. There we go. You also see the Jan 2020, so same month, quarter calls, the 25 calls also went up later in the day here. Let's see those. Those went up 20,610 as well. Also around the same time. Didn't go up marked spread, though, which is interesting. So pretty much around the same time, obviously very linked paper. A paper coming in for $1.40 on these calls. The market was $1.35. $1.30 at $1.45. So it looks like at first blush, we could potentially have a little bit of our old friend, the bullish risk reversal, the 13th quarter risk reversal here in Jan 2020, not regular Jan 2020. So a little bit more time for this one to run out. In which case, what do they do it for $1.20 and $1? So they're actually paying a little bit of a credit if that's the case, about 20 cents, a debit, I should say. If that is indeed the case, these are now $1.40 bid here going out. So it looks like someone is perhaps bid. Also worth noting here, that how much size? There's only a 20 lot on the bid, so that's not much size bid here. So not size bid going out for these calls. Also worth noting, though, there is size on this strike here. The 122,000 contracts open on these 25s. Let's see if we can dig back a little bit to see when this was open. Interesting. So a lot of this, about 50,000 of this was opened just in the past month or so. We saw 25,000 of these calls trading back when the stock was $15.44 for around 90 cents, and another 25,000 or close to it back on the 19th of September when the stock was close to where it is right now, $17.20. They're trading for about $1.30 back then. So we saw some paper piling in, maybe, so potentially a chance to get in on these or perhaps giving up the ghost here. Size open on this strike. Let's look here. Again, this is our first time looking at least in a while on this name. Let's see what's been up here over the course of the past year. We've got a year ago, this name was trading substantially north of where it is right now, trading, about $2 higher, $19.51. Over the course of the year, it drifted down to as low as about $11.93. So it took a nice drubbing back in, guess when? Early February. I wonder what could have happened then that could have driven down a stalwart name like Range Resources, Inc. Then it's been trading lately close to this range, got as high as about 18.5 recently before kind of dropping off a little bit again here. It got down to 16.5 as well. So it's been in like a $2 range, or right exactly in the middle of it right now. Mr. Meatball, that's why it's kind of fun sometimes to do these live, because you never know what the heck you're going to get. And it looks like our initial scan perhaps has uncovered a risk reversal, or it could perhaps be indeed some giving up the ghost and flipping the script, getting on to some of these puts. Could be just a straight up strangle coming in. Someone's like trying to lock in. It has been a little range bound lately, so it could be some strangle selling out here as well. What is your spidey sense telling you about these trades here, sir, in Range Resources Corp?
Good old RRC.
Everyone's favorite.
Yeah, what was that used to be one of my favorite Nintendo games was
you think of RC Pro-Am. RC Pro-Am. That was a great one. That was one of the first kind of before Mario Kart. That was one of the first like driving around, blasting each other kind of games. That was great.
That was a great game. That was a great game. I'm going to go out on a limb and say this is just based on when this was done, right? If it was a strangle, I would think it would be near dated. And because it's not that near dated, I think it's no way it's not a risky. Could be a slight close, but I think it's a risk reversal. It just the timing, Jan 2020, you would only do a risk reversal there.
It does have the whiff of a good bullish risk reversal. I've always been inclined to like myself a nice a bullish risk reversal. So it is possible. Could be a strangle. Could be a lot of funky things going on. I'm with you. The timing seems a little funky for a strangle, but we've seen funkier things. That's why we call it the odd block. After all, let us know what you guys think. It's kind of fun to have these coming across the tape hot and see what we got. Let's see what's next. What our scanners are picking up next. Oh, we're going off here to Huntington Bank Shores Incorporated, ticker symbol HBAN. This one is a bank holding company, pretty much. So the name kind of says it all there. This one averages 1,100 contracts a day. Today doing about 9,000, about 7-to-1 calls over puts. And the lion's share of that, let's see how much volume we got on the tape so far today. We got 9,100 and change. Of that, 7,200 coming in this particular trade, including the first block that kind of caught our eye, the Nov 15s. Going up for 24 cents, pretty much right on the bid. Of course, they're a penny wide there, though, so sometimes that could be a bit misleading. But if you got 3,400, unless someone's working a funky bid in there, they got some size off on that bid. So they're 23 at a quarter now. Maybe someone learned them the error of their ways and shoved a few thousand down their throat at 24 before they decided to widen out. We're seeing more now going up for 23 cents here. So a total of 7,200, like I said, that initial kind of at about 3,600. So pretty much 2x going up on this strike here for 24 and 23 cents. Pretty much opening paper here. It has no OI to speak of. So we got paper coming in here, and let's see here. Yeah, crushing 20. Yeah, it looks like they're crushing the bid on the early kind here. Perhaps as well on the latter. Doing, again, all of this for 24 to 23 cents. Let's look here at the chart before we make some final determinations here. Yeah, no OI to speak of, so all opening. It's trading right now, like I said, a year ago it was trading not that far from where it is right now. It was trading about $13.90 or so off about 40 cents. It's had quite a range in between. It got down to a little bit below, right around the 13 handle again, to the downside, and then rally ho up to about 16, almost 17 back in March. And it's kind of vacillated around again then, got as high again recently as about 16.5 back in September, early September, before kind of taking it on the chin recently, dropping about 5 handles back down to where it is right now. So Mr. Meatball, are you feeling that this is paper getting a little bullish with it? And maybe given that chart, we could see that they're coming in to say, hey, and they're working some size bids and getting filled on this fairly tight market for a name that trades 1,000 contracts a day, which is impressive in and of itself. Or do you think this is paper coming in to say, hey, we're not breaking through that strike anytime soon. We're going to overwrite it and harvest ourselves some 23 and 24 cents 7,000 times. So what is your spidey sense telling you on these?
Feels like this is a hedge. It just, a name like Huntington, the pressure the regionals have been under. I mean, Vol's up on the day, and this has been, the chart on this thing is kind of ugly. So I think this is a little bit of a quasi panic buy. Someone is trying to buy these, because that chart is ugly. That is an ugly chart.
Yeah, it's kind of been all over the place. You think they're scooping,
So I think they're a buyer.
They're scooping. It does have some of that flavor of that saying, hey, we're at the bottom of the near-term range. Perhaps we are poised. It was 5 handles higher just a month ago. So there's certainly, if you are a believer in such things, there certainly is room to run on the upside. So maybe we'll put this in the panic scoopage category here, paying 24 and 23 cents 7,000 times. We'll wrap it up here. That's why I like the kind of immediate ones. We get some funky names we maybe don't talk about usually. This is Laredo Petroleum Inc., $10. See if you can guess what they do. Ticker symbol LPI, trading today $6.50. Pretty much unched on the day. Excuse me. This is the name that does here about 500 contracts a day. Today, having done about 3,000, 103 to 1. Calls over puts. So pretty much all of the action going up on this one trade that came across our radar. Again, it's not always just size. Sometimes it's size in relation to what they usually do and what else is going on in this name, and that certainly applies here at this name. When first came across our scans, 2,000 of the Nov 7s going up for 21 cents, and again, a name that does about 500 contracts a day, doing 4x their ADV in one print. Usually comes across our radar. And total looks like a total of about 2,650 have gone up on this strike. Again, the early kind on 21 for 21 cents. They were pretty much 20 at 30. So coming in pretty much right on the bid on those. Looks like a good chunk of overwriting going on here. Taking that 21 cents and going off to the races about 2,600 times. If that is indeed the case, they're bid out in their face. They're 25 cents at 30 now. So these things, and even with the stock unched, so someone bidding these out, which is funky if they were indeed coming in to crush this strike. Let's look at the vol here really quickly. The vol also ticking up here. The vol on this strike, it was 61.5 on Friday, 67.5 today with the underlying. Looks like pretty much unched here on the day. So that usually is indicative that they're buying these things. When they're bid out and the vol is ticking up, and which that is the case. They got a great print. They bought it a penny off the bid. So hats off to their broker for making market makers irrelevant yet again. Oh, here's your market. Nice and pretty tight for a liquid name. We'll come a penny inside and we'll do it all ourselves. Thank you very much. No wonder why no one's a market maker anymore. Let's go here. Look at the chart here. A year ago, it was trading well north of where it is right now, about almost $13, $12.91. Then it kind of dropped down to about $8.20 back in February. Again, spoiler alert, February was crazy. And then it went back up to about $10, $11 in May. And then it's kind of been vacillating all the way back down to where we find it right now, $6.21. So the chart might lean. You got a kind of an interesting conflicting scenario here, Mr. Meatball. You got the chart probably indicating this probably might be a buy. You got the vol spiking, which usually means it's a buy. You got these things bid out in their face, which usually means they probably bought them. The market makers are not inclined to bid up the vol of something they just took a ton of. So all sorts of weird things, and yet the print they got was fantastic. They bought them a penny off the bid. So that's the only thing indicating the latter. So there's a lot of different conflating indicators here. What's your spidey sense telling you on this one, sir?
Oh, probably a buyer.
Yeah, I think that's pretty safe.
I know you were looking for something really profound, but yeah, I think you're right.
This would be a good one if we had Tubby on to talk about the nuances of executing in an illiquid name that's a dime wide. If you get a print like that,
there's probably a stock price somewhere that's in there that is adjusting that, where it's not nearly as good of a purchase as the customer thinks, or as it appears on the print.
Yeah, I'm looking here. There's about 3 million contracts on the tape. They average 5 million a day, though, so pretty much looks like in line. But yeah, they're paying that somewhere else. You're right. They probably gave it up on the stock leg. Maybe they did 660 or something on the stock leg. There are other ways that's why, again, you can't only just look at the bid offer spread, listeners. It's a good first indication, but sometimes the spidey sense kicks in and it tells you there's more afoot here in this print, and this one certainly falls in that category. Let's keep on rolling now. It's a wild card day. We don't know what the heck Uncle Mike's going to do, so let's get to it. It is time for the old strategy block.
It's time to dispense options wit, wisdom, and and education. It's time for the Strategy Block.
All right, Uncle Mike, sir, gave you a nice break with the odd block there, gave you some time to collect your thoughts, also some time to just adjust to the sheer mad impact that you have had on the markets over the past week, and just maybe deal with your own personal guilt you may have over that for leaving St. Charles and being so selfish. But now that we're moving beyond all that, what do you have in store for us, sir, on the Strategy Block?
How do you get bullish from an option strategy, from an option standpoint, in a market like this? That's what I want to talk about today, and some things that I'm looking at that I might even implement later on in the day today. So let's say that I want to just kind of talk about how do you avoid really getting pounded from a market like this if you're a levered trader, meaning if you're not necessarily just buying and holding stocks, meaning that you're trying to create some higher returns by using leverage by trading options. And how do you avoid that? Well, the first thing that I want to mention on this is that I want to revert back to the strategy block that I did a couple weeks ago when I talked about rule number 1 and rule number 2 of selling put spreads. Rule number 1, don't get your face ripped in. Rule number 2, don't forget rule number 1. Now, I'm proud to say that on the put spreads that I did a couple weeks ago, I definitely lost, but I did obey rule number 1, and that was not get my face ripped in. And I obeyed rule number 2 by not forgetting rule number 1. So with that being said, the best way to avoid things like this, it also goes back to my example on the double chicken wing in wrestling. What's the best way to get out of a double chicken wing in wrestling? Don't get into it in the first place. And so with that, because of my extreme paranoia of selling put spreads and just getting out very quickly if it goes against me a little bit, I've been able to survive this market, this pullback. Even if had I stayed in, then I probably would have blown out some accounts, quite frankly, with in the leverage section of the portfolio. So with that being said, now you're at a point to where either you weren't in the market or you were fortunate enough to avoid this. What can you do to get back into this? Meaning, do you get levered right now? Is now the bottom of this pullback? Is now the time to buy? Well, I wish I knew. That would be a really nice thing to have that ability. Or does this mean there's more to come? Are we going down to 250 in SPY? And testing the lows of the year? Well, I don't know that either. But with that being said, there are often times in the marketplace when we get pullbacks. And when we get pullbacks, there could be tremendous buying opportunities. I mean, we could right now be staring at the buy of the year for 2018. We might be looking at it right now. Who knows? But with that being said, we could also be looking at the last opportunity to get out of the market before this actually goes down to the 240 level in SPY. So what can you do if you are bullish on this market? Well, I want to tell you some things that I'm looking at right now. I remember just kind of talking with some people at Duke when the market was tanking last week. Well, what are you doing right now? And when I was not in the marketplace, I'm thinking, okay, well, I'm staying out of it. I'm in what I refer to as not today mode, meaning that let's go back to last week. Actually, I think it was on the day that we did the show at Duke on last Wednesday. I officially went into not today mode at that point, meaning that are we going to get in? Well, yeah, maybe, but not today. Following day, I continued to stay in that mode when it was continuing to go down like it was, and I also stayed in that mode for Friday, even though the markets did come up a bit on Friday. So with that being said, at what stage do you actually look to get into the market? Well, I'm looking for some type of stability in the marketplace. I want to see something to where we're not having a lot of movement, where we have maybe even a little bit of a channeling effect on the market in general. I might look to get into the marketplace later in the day today, right before the close, but still not sure at this point. And by the way, full disclosure, I am still long a tiny 303 call for November that got clobbered, but I'm okay with that. It was a very large percentage loss, but it was a very small loss on the percentage of capital I have set aside for trading on it. So with that being said, what on earth can we do once we decide to get in. So let's say I get the stability with which I'm looking for. Well, if I buy a call option, those aren't exactly the cheapest things right now. If I sell a put spread, well, that might be kind of difficult because remember rule number 1 and rule number 2 of selling put spreads, that could be difficult in that, let's say this is just a minor break and all of a sudden the S&P has another 80-point down day tomorrow, let's say. Well, that's going to be difficult to do. So a couple of things with which I'm looking to do. First thing, perhaps buy a call spread, maybe at the money, maybe out of the money, but buy it with a half position. Maybe I would even buy a long call option, but I would do it with half of the position size that I normally would. Folks, never underestimate the power of gamma. So let's say, for example, that this market comes right back, decides that this pullback was a mistake, and we just come right back to the 293 level tomorrow. Well, if that's the case, that's fine, but have an understanding that if that were to happen, we're not going to have a 20 VIX, most likely. We're going to have a large decrease in implied volatility. So because of that, I would recommend maybe considering doing the call spread route as opposed to, say, just buying the long call route. Get some type of way with which you can account for the likely decrease in volatility should the market come up in value. Now, the second thing with which I would recommend looking at, once you've decided whether you're going to go with a half a position or a full position, whatever the case may be, I would look to have it set to where you have an exit plan. Now, I don't think now is the time to just be buying an out-of-the-money call and sitting on it. I do think that maybe a month ago it was, because of the fact that if the market's going to continue to go higher, great, you're looking good. But if the market does what it did, you just put a small amount of money on the line for the out-of-the-money call. Now it's a little bit different in that you have to have some type of accountability for the time decay with which you're buying. So does that mean that we sell a spread of some sort, maybe sell a vertical put spread? I would say perhaps. But if you were looking to do that, or at least what I'm looking to do, I'm going to make the distance between the strikes a little bit more narrow in this marketplace. Now, see, the benefit of higher volatility is that you can actually collect more premium on short options. You can go a further distance from being at the money. You can have more of a buffer zone, so to speak, and still get a decent amount of premium. But once again, never fear the market, but always respect the market. If we do go down significantly, I don't believe this is a market to where you can have the contingency stop loss in place and expect to and kind of bank on that. When we have higher volatility as such, if we do have another 80-point down day in the SPX tomorrow, I like having a more narrow distance between strike prices because it's going to be less risk on the table. And if the market does just blow up in your face, you have that available should it happen. So bottom line of what I would recommend taking a look at, and just considering if you're looking to get bullish in this market right now, first thing, make sure you have a little bit of stability. The reason that I did not get into things last week is because I did not want to catch a falling knife. Second thing, perhaps take a smaller position than you normally do. Remember, the power of gamma is very real. And if you have the ability to enjoy it on the way up, then the half position, yeah, you would have wished you had a full position, no doubt about it, but you can still have a very powerful position. Next thing, if you are going to sell some premium as a means of financing this, do a lesser distance between strike prices should you be selling a short put spread in a market like this. Now, with this, you could also take a look and consider something like a calendar or a diagonal spread in some way, shape, or form. I don't like that at this point. In theory, you could argue that maybe volatility is higher in the near-term months than it is in the longer-term months, and that way you're getting a better deal on implied volatility just because the vol came up so high in the near-term months. Now, that may be true in individual names. I don't follow a lot of individual names. I just look at the S&P. But if you're doing that, the one thing to keep in mind is, yes, if it goes against you, and the whole purpose of short premium is in case as a way of being short volatility or having time decay in your favor. And yes, you'll have those things, But if the market does make a major move against you, you could have had more short premium by just being vertical. So with that being said, that is the strategy block for today, October 15th.
All right, sir. Well done. Now we'll keep on rolling. Let's get into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. One of the things we like to watch in Around the Block is, of course, volatility. We touched about it at the top of the show there. We asked you guys last week. We asked you guys, where did you think we're going to see VIX close last week? Were you buying things? Were you buying those levels? Did you think it was just a temporary blip? Gave you 4 different choices. The 35% of you at the end of the day was a very narrow margin of victory. 35% of you coming in saying the correct answer, which was higher, which was greater than 19.5 at the time that poll was posted. VIX cash was around the 18.5 level. So north of that was the right answer. But I should point out that was the late surge when it was clear for the last couple of sessions of the week that VIX was going to be north of 20. So that was a Johnny-come-latelys. The early voting was very demonstrably in the lower camp, in the 16 to 18. So we thought we kind of did that one late last week. We thought we'd give you a full week this time, and maybe with the benefit of a weekend and some other additional time to maybe mull over what the heck's actually going on out here, we give you another stab, another tilt at the old windmill out here. And this week we're asking you, quite simply, there's a lot going on in this volatility storm. You think things are going to get worse this week, or maybe will earnings season exacerbate or lessen it? What do you guys think? A cooler head's going to prevail. So we gave you, again, another very, very simple task. Where do you think? Well, simple, and you'll see how challenging it is when we get to Friday. But where will VIX close this Friday? So we'll give you another stab at the old pin the tail on the old donkey here. And right now, again, in early voting, we kind of just posed this before the show, so it's still pretty early. But once again, our audience is kind of all over the map, which I kind of like. It kind of shows what's going on out there in the marketplace. Gave you 4 choices yet again. Right around here, a nice wide range, 19 to 22. So it could be anywhere in that range and be right around here, or north of that, higher, north of 22. So into the mid to even higher 20s, perhaps. Lower, so in the 17 to roughly 19 range, or even lower, which is south of 17. I'm on record already on my crystal ball coming in for in that lower 17 to 19 range, perhaps a bit optimistic, perhaps a bit pessimistic on the vol side. We shall see on Friday, but a good chunk of you are on board with that. In fact, the winner though right now is, with a third of the voting, is right around here, 19 to 22. And, it's hard to argue with kind of any of these choices really here. And then we have a second place, 27%, coming in for the even lower, south of 17. So saying, yeah, you know what? I think we're going to wipe a lot of this vol off the map this week. And tied for third, we have higher, north of 22, and lower in that 17 to 19 range I mentioned earlier. Mr. Meatball, we've kind of already played with the crystal ball in vol views, but what do you think here is cooking? If you had to do an early crystal ball, again, I already did it for last week. If you had to do your early crystal ball for this coming Friday, sir, where are you falling on this poll?
I don't know.
That's what makes it fun, right?
Yeah, I'm thinking that I think we're. I think that we're going to have another dip this week, a serious one, before we finally rally home next week. That's kind of my feel.
So you probably be in the here or higher camp, I would wager then.
I would say here or lower.
Oh, so you think the rally will come towards the end of this week and the vol will come in?
Excuse me. You're right. Right. I think the rally come. Oh, it's by Friday, huh?
Yeah, this Friday.
Here or higher.
Okay, that's what I was thinking.
Although I will say that I think the VIX has peaked. I think that 28 change that we saw, probably the top. But I think the S&P probably has not bottomed. I think you're going to see the S&P test the lows or break the lows with the VIX like 26. And that'll be the sign to buy, right?
There you go. By the way, a lot of people were hitting us up with your buddy there, whom you are the VIX confidant for, Mr. Kramer, giving him a huge
VIX guy. You'd be surprised.
Giving him a huge hard time about the VIX $30 thing.
He liked that, so we got right there.
Oh yeah, he was close. I'm just joking more about the dollar sign thing. People were taking a lot of umbrage with that, which always cracks me up. I did also see last week, I was going to mention to you, by the way, someone put out a tweet which got a lot of love. I was thinking maybe it was you at first, but it wasn't. I forgot. I don't have here who did it, but they posted somewhere. There's a special circle of hell reserved for those people who quote VIX as a percent.
It's probably Contango, F Contango. Yeah, I mean, that's what you keep doing, right? You give Kramer a bunch of garbage, but you're the one giving us the percent of a percent.
I am. I'm fully in that train now. You can only fight.
You have no.
You can only fight. Fight progress for so long.
To stand in this.
I don't quote the dollars.
Kramer
I don't quote the dollars, but I will say. I usually preface it though with those of you who like percent of percent will like this. So I do preface it with the madness.
Nobody likes it because that's inaccurate.
I like to turn the knife a little bit.
You do. You just do it to torment.
Which is kind of fun. Before we keep rolling, Mr. Meatball, what else you got watching for the rest of this week or in around the block, sir?
I think you got to keep an eye on those interest rates. Keep an eye on Apple. Apple is getting punched in the face today. It'd be interesting if we can stay green today because that'd be the first time in a couple of weeks we've had back-to-back green. And then watch that VIX formation. It's still pretty heavily backward. We have a little hitch in December, but November is still trading above January and February, and October, granted it expires Wednesday, is trading, still 20. So there's lots to look for.
There is a lot to look for. Mr. Uncle Mike, sir, what are you looking for while you're out there finding cheap ways to get bullish again?
I just wanted to see what happens with us. Right now, we have not had. I might change my mind in the next hour or two, but for right now, I still don't see a reason to buy yet. I'd rather see a little bit of upside and miss some of the upside, and to get a little bit of some stability going higher a little bit, or at least a little bit of a channeling effect. But just kind of watching to see. When the market's going to show its hand for this week and all the craziness that happened last week.
All right, listeners. That tune means we did it. We're done. We're out of here. All sorts of fun stuff on the show today. We talked the continued topsy-turvy world of this market. Will it give? Will it taketh away? We shall see. Uncle Mike himself even on the fence, not really seeing some signs to buy, which may be something you want to put in your pipe if you're out there. If our resident permabull is still on the fence, even though he did give you some cheap ways to express those views if you are so inclined out there. But something to mull over. Mr. Meatball thinking maybe VIX has seen its peak. Mr. Kramer thinks VIX was at $30. So everyone's got their own opinions out here. But before we wrap up here, let's go back around the horn one last time. Let's start with the Meatball. Mr. Meatball, if I am intrigued by these things, if I'm confused why VIX, I shouldn't quote VIX as a percent or all these other things, why VIX isn't a dollar amount, where should I go? What should I do?
We finally got the site back to OptionPit.com from OptionPit members when we migrated to WordPress. So you go to OptionPit.com/easy-short. This Wednesday, Stephen Place of Investing with Options and myself are doing a dual co-webinar covering VXX, how it's an easy short, and how it can also blow up in your face if you don't know what you're doing.
There you go. So you're part of WordPress now. So you're joining the 80 billion other people, out there.
Yeah. So we migrated away from Drupal, which Drupal sounds like some sort of eye inflammation, doesn't it?
It does. It sounds very bad.
I've got Drupal.
The important question though, when you bring him back that crazy video guy, I miss him.
Him? I loved him. He was a nice guy.
He was the best. He was my favorite part. I'd go there just watch him every day, just get a nice.
He was a handsome young man.
He was a handsome fellow. Check out. Maybe someday they'll bring him back. In the meantime, go over to OptionPit.com. Check out the new WordPress. Get rid of all that. Cure your case of the Drupals. Head on over to OptionPit.com. And last but not least, Uncle Mike. I don't know what you're putting the old St. Charles Wealth on, but it does have a cool fox on it. So if listeners want to head on over there, what are they going to find, sir?
By all means, feel free to contact me if you are looking for a financial advisor who thrives in times like this. These are exciting days. This isn't a day that I hide from my phone. This is the day that I get on my phone and call clients and say, hey, what are you looking to buy today? Well, maybe I don't say that. But nonetheless, if you are interested in working with a financial advisor, who is not afraid of times like this, feel free to give me a call at 312-212-3531 or check out my website at www.stcharleswealth.com.
That would be a creepy call. Hey, what are you looking to buy today? They'd be like, huh? Excuse me? Who is this? Check them out, stcharleswealth.com. Click on the Fox. It's got all sorts of surprises and Easter eggs. And it does because I keep saying that, so therefore he has to do it now. So stcharleswealth.com to learn more. And on behalf of Uncle Mike and the Meatball, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, sending in such great, many, and varied questions and tweets and comments and emails and all that fun stuff. Keep them coming. We read them all, even if we don't get to all of them on the shows. But we love your informed ideas and speculation. It's always fun. So keep sending those in, and we'll see you back here for this show on Thursday. But stay tuned at least to the Mixler, and indeed, of course, to wherever you subscribe to podcasts. It's great stuff hitting it right now from the SDA conference coming up this week, kicking off in a couple hours. We got the big FIA show in town this week. So stay tuned for content from that. All sorts of good stuff. So just stay tuned to the network. We'll keep you busy. Otherwise, we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.